Hey there, Derick Van Ness here from Big Life Financial, and I've got my guest Rob J. Williams with me. Hey, Rob, great to have you.
Good to be here, Derek.
Yeah, and for those of you who don't know, I'm often known as the guy who's worked with thousands of business owners, and Rob here has been in the growth market, helping people to grow and build massive businesses for the past 30-ish years, done 35 plus roll-ups, helped hundreds of business owners buy additional locations, and really just understands everything about growing businesses, which is why I'm here with him because listen, if you don't know if your business is going to be able to grow, there's a lot of things happening in the world right now. Rob's going to help you to understand how do I break this down and understand, can I grow? Where can I grow? What does that look like? How do I build my business in a way where it's going to be able to prosper? And this is something that comes up with the one-on-one clients he works with in our operating partner program all the time. And so, Rob, I just want to tap into your brain today and talk about, can my business grow? How big can I go? I've got these huge dreams. How do I know if those are even attainable for me? And how do you break that down? So maybe take me through. I know there's key levels that you look at this from, and maybe just take me through a little bit of like that timeline as a business owner, so we can look at help people figure out where they're at, and then take it from there.
Yeah, and the lens that we're looking at this is absolutely the lens of the investor. Where is there upside value acceleration that comes from a business's ability to be able to go into a growing market or be able to grow share in a market because of a really competitive strategy, or manage the downside risk. So ensure that there are some really robust frameworks and principles and evidence that is used to be able to defend the belief that capital is being applied in the right way to be able to deliver that value acceleration. So when we think of everything from the lens of an investor, and that's a big part of what I do, Derek, it's kind of taking the mindset from an owner operator to an owner investor. So they
Mhm.
start to understand things rather than income, they're thinking capital. And that's how an investor will be looking at this. If they invested $1 into your business, how do you create something that's going to give them a $15 return in 5 years, as an example? How do you make your business look more attractive than other businesses they could invest in or other asset classes that they could? So we understand the type of return rates that we're able to achieve. But if you are able to grow your business from a valuation of 4 million to 40 million, what would that look like for the investor? And that's a really good simulation to create, because it means that all of your decisions are based around increasing the valuation of your business and doing the things that investors value, or people that might one day want to buy your business, they would value as well. So it always feels like the actions I'm taking, the way I'm deploying my resources, the decisions I'm making are all linked to something that we're trying to build in the future that is of a much higher value than it is today. So everything I'm doing is exactly the way that I would work with the CEO of a portfolio company in ensuring that they were managing it, that protected our investment at a PE level.
Got it. So what I hear you saying is, for the business owner, it's like take a step back and not think like an operator, but really think like, okay, if I was an investor and I had money to invest in this company, uh, what would I see? Where are the opportunities? How would I want to deploy capital? I think that's what you mean when you say capital versus income, right?
Yeah.
Is where would I put my money to build the business and make it more valuable? I think a lot of business owners are just focused on what's my income, right? How much money am I
Yeah.
bringing in? They're not so much looking at how do I make the business more valuable? And that's this shift you're talking about, is making the business more valuable by thinking not as the guy who's operating it, trying to get a salary, but as someone who's trying to make it sellable for a higher amount. Even if you're not going to sell, that's what makes this thing more powerful. And so, first shift I hear you saying is, we've got to take off our business owner hat. We've got to put on our guy who invests in business, step back and look at this objectively as to if I had other people's money, what would they be expecting me to do? What's the best thing to do to build their investment, even though the them here is you? Is that right?
Absolutely right.
Okay.
Absolutely right. And it creates a paradigm shift that enables business owners to think much more expansively, recognize from their perspective how they get that alignment of their own personal business and financial goals. And we often talk about the wealth gap and a
Mhm.
business being worth 80% of somebody's total asset base. But if the target retirement figure or the retirement wealth figure by a certain date is not able to be achieved with 80% of the value of your business today, then sometimes you're either forced to lower your expectations, which nobody wants to do because there is no need for that. But how do I build my business to a valuation that enables me to have no wealth gap when I actually sell my business? And that's really the kind of the precursor for a lot of these conversations. It starts with the exit in mind.
Mhm.
We look to try and establish operational excellence, which is
Mhm.
about the predictability of returns. But then we look about value acceleration, which is how do we go beyond organic growth to being able to create a business that has a valuation that is far greater and you can achieve far quicker. And there'll be terms that people will hear me say like operational independence. So the
Mhm.
first thing that we really need to be able to do is ensure that the asset that you've created today can run without you. Somebody can come in as a general manager and manage the resources, manage the structure that you've created to be able to deliver the profit returns that you require without you needing to price yourself in with a salary because you're employing somebody to do that job. And then that frees you up to be able to say, I've done it once, I've built the asset, I'm not running it myself, let's do it again. And the very kind of slow idea is I'm going to invest and do a startup. The
Right.
idea that when people work with me is I'm going to buy a business that's already got the same profit as my initial business and then repeat and repeat and repeat. And when you can demonstrate to an investor that you can do this 3 or 4 times, you've got good capability, you know to surround yourself with the right people, you can deliver those returns with high levels of predictability, then suddenly it becomes very interesting and you can move into something resembling your own investment business where
Mhm.
you're not just using your own capital, but you are working with investors to be able to provide you with money through debt or through equity to be able to invest in those acquisitions and additional working capital to be able to accelerate growth and do things like create single technology platforms and standardization of how each of those businesses works, which will increase your multiple. It's much better to have a platform business with connected portfolio companies to a central platform as opposed to having 4 or 5 individual portfolio companies that don't really have any synergy at all.
So tell me with a platform company, what's the difference? Like what would I have with a platform company versus the individual companies?
Yeah, okay.
Mhm.
So one example is we're currently working with a very new private equity fund that is in the e-commerce space, and it's about having a central technology platform that all of those e-commerce companies plug into. That technology platform also extends to having everybody on the same payroll, having the same recruitment policies, having a centralized IT. So it's having centralized functions and a
Mhm.
common tech platform that's driving the data, the personalization, the consistency, and the marketing that gives us that higher level of predictability rather than the variation that comes from running 6 portfolio companies run it, in completely different ways.
So this would be what a lot of people would think of as like the corporate headquarters. It handles HR and payroll and technology and all of that. And you get economies of scale, right? Which
Mhm.
is when you have multiple companies that are using the same service, you would essentially get the value for a discounted cost, right? Which makes all of those companies worth more because they have less cost. But then to your point, if we can have them all working on the same systems, then if we tweak the system once, it works across all the companies so we can really accelerate that improvement of companies. So tell me, Rob, as you're working with people in the operating partner program, the businesses you're actually like hands-on, what are you seeing challenges? What are some of the conversations that are coming up as people are trying to grow their businesses that are pretty common?
The first thing that comes to mind is that initial move into operational independence.
Hmm.
So the business is good, revenues 3 million, 3.5 million, and then the decision is, right, we're going to change our business model and we're going to bring somebody in to be able to go and run these businesses for us. And then the growth investment doesn't realize the growth that you wanted. You're not as close to the businesses anymore because you've hired somebody that is actually a COO, but you believe them to be a CEO. Good at
What's
kind
the
of
difference between the two?
So the difference between the two is kind of what I'm going to talk about in a minute. So the COO is very good at organizing the resources to achieve a result. So they're leveraging the resources, the people, the suppliers that they've got, and the result that they've got in mind feels like it's good enough to be able to get to. But when that result isn't achieved, they're not then able to be able to think beyond that and think strategically in terms of why are we not getting the result? And that takes us into, is the market there? Which typically is the question a CEO would answer if we're not seeing the results that ideally we would like to. So viability is a huge thing. So whilst the business was viable when the founder was running it before they decided they wanted to move out of the business and bring this COO in, for whatever reason, it isn't, and they're not delivering the revenues that they thought they would be previously. Yeah,
Right.
they're starting to use credit as operational finance, which is never a good thing.
Nope.
Um, they're starting to doubt the quality of the people in the business to be able to do the job that they need to do. But the COO doesn't feel empowered or paid to a level that they can make those decisions. So
Got
we've
it.
got this imbalance between agency, between experience and capability to be able to deliver the kind of results that are needed and take ownership of that. So when you're in a situation where revenue is dropping and costs are increasing, your debt and the debt repayments and the interest on that debt suddenly start squeezing your monthly cash flow, and
Hmm.
you're asking yourself, should we be refinancing the debt? Should we be injecting some of our own personal capital? It's like, well, if I was confident that the market was viable, the business was viable, and the market was there, then I'd be more comfortable in doing that. But if I'm just going to kick the can down the road for the next couple of months and then I'm going to be in the same situation again, then you've got to ask yourself, is the business viable?
Right. And so what I hear you say with viable is it was working at a certain level, but when we go to this bigger level, maybe there's not enough demand, enough people around, enough buyers that can function at that level. Is that what you're saying with viability? Like, can it sustain this growth, or does it only work at a certain size?
I think it's more than that. I think that the first thing is the market there? Are there enough people out there that want your company's products or services? Is the volume out there? Yeah, what's changed? So I use the formula X plus Y equals Z. So if 18 months, 2 years ago, X plus Y equaled 3.5 million and 600,000 profit, what's changed that that is no longer the case? So this is where we might start to look at things like Porter's five forces, where we look at, have we had any new entrants in the last 18 months? Have our costs suddenly massively increased so our cogs are being squeezed? Are there more substitutes that people are able to access digitally or online that mean they no longer want face-to-face service? And are there more competitors that have moved into our area or were already here but have expanded and are stealing our market share? Yeah. So
Yeah.
these are all highly relevant questions to ask yourself at any point in your growth, to be honest with you, but especially when you're in a situation where you've seen kind of this significant shift. which can cause sleepless nights for a business owner, huge levels of frustration. And I also think, having frameworks in place to ensure that your resources are all lined up in the same direction and they're doing the things that you would need them to do to be able to achieve the results are really important. So we want to make sure that the market is there, and then we want to make sure that our resources are being allocated to doing things. So I talk about execution as being experts in coordination and organization. So are
Hmm.
we coordinating and organizing our resources in a way that is able to ensure that we're able to capture the market share that gives us the results that we need? But if the market isn't there, then it's a fallacy. The
Right,
strategy is flawed. If we
right.
continue operating in the same way with the belief the market's there without doing our tests and being able to defend that, then there's a good chance we're going to be insolvent.
Right. And I think this is more relevant than ever with a lot of the changes that are happening in the world right now, whether those be political changes, technological changes, right? There's like some major reshaping of the world, uh, especially all the technology, right? Because the technology isn't just technology, it's that's what all the businesses run on. So the way people do businesses has always been changing, but it feels like it's happening at a much more accelerated rate. So you have to consistently be asking, is this still viable? Or do we need to change to be viable? Or my best guess is like, is the way we're delivering our product or service the way that people want to receive it?
Hmm.
Like all of these kinds of ideas, because it's not like if you're in a business, like it probably just went to zero. It's more like, oh, people are now like people used to watch you know the three main networks for TV.
Mm,
Then cable came along, and all of a sudden it's like it's not that people stopped watching TV, they just want to watch it in a different way. And
mm.
then YouTube and the internet came along, and the way people are ingesting content and information is no longer even the cable networks. Now they're looking at what can I get online. So TV didn't necessarily change or go to zero, but how that model is working changed. And if you don't understand that, you become not so viable. Is that a good example?
It's a very good example. It's a very good example. And yeah, when we think about that technological change, we need to think about, what does it really mean? Because I think, when you talk about when you're consuming entertainment, or how it's gone from three national TV channels to YouTube and streaming media and huge levels of personalization, where is the impact? So there's an impact for content that you might pay for to access. So specialist content now may be available for free because revenues are no longer kind of got through the value of the content. They're got through the volume of people that want to read the content and the advertising that can be sold off the back of it. So we've
Sure.
always got to think about what is the repercussion for the economic model. So is the economic model the amount of money that's made through selling access to content, or is the economic model selling access to content, and then because you've got some amazing kind of digital real estate, you can then make a lot of money because of the eyeballs that you're able to bring in there, and the data kind of footprint and profiles of those eyeballs, that you know exactly who they are. So you're able to then go to people that want to advertise and say, this is your target avatar. These are the people that you really want to be selling to. So that level of insight and intelligence uh, is a big change in how content is consumed and how content is monetized. I can remember going back, whew, 1996. One of the businesses I was involved in was a publishing company. It was a classified publishing company that used to sell printed advertising copy for car sales and for home and garden goods
Mhm.
and business opportunities. And all they had was surveys of individuals that they knew were buying the magazine, and the magazine had a cover price, and people would go to the newsstands or the news agents and buy it. But they would have to survey the individuals that were buying the magazine to be able to get statistics. So they knew how many of them were pet owners, so they could then sell to individuals that were selling goods and services to pet owners. They
Right.
knew how many people earned a certain amount of money and would choose a certain mark of car, so they could then sell advertising to those car dealers. But the
Right.
car dealers, I mean, it's like ABC circulation statistics, right? The car dealers would be happy to pay more for advertising, and the publication could charge more for advertising. The higher level of probability they could show that within the circulation were the type of buyer that they would be targeting. That's the very kind of rudimental version of
Right.
where we're at now with digital content as an example of that change.
Yeah, yeah, it's just changed so much that it's so much more granular. Now, if I'm a typical business owner and I'm looking at this saying, okay, my business is working, I want to make this transition, but how do I know if I'm viable? What are the types of questions or challenges you're seeing people run up against?
Yeah, I mean, I think this is a really good question, and I would use the investor simulation again. Yeah. So first of all, do I know how big I think the business can be? Yeah. What's your level of ambition? And the level of ambition is probably going to be correlated with the level of identity. So, what is your level of ambition? Ambition excites people. If you can show ambition to grow your business from here to here, that is the first thing that will get people excited.
Sure.
That gets attention. So, if you know that by telling that story and building that narrative, people are going to be interested in it, then you start to think, okay, there is a viability to what people think could be possible in my space and how I can position myself as a category lead to build a much more valuable enterprise. And then we get into the how. So how do you do that? And that's where you need to start looking at evidence and data.
Right.
And from an investment point of view, we might be looking at the sector and thinking about the compound annual growth rate. So, what are the analysts? Because we don't do this work on our own. There'll be people out there that are looking at markets in terms of, the long-term view on the stock markets, as an example. What are
Sure.
the analysts saying are the political, economic, social, technological, legal, environmental factors that could be driving market expansion or driving market specialism towards this particular strategy or kind of business plan?
Right.
And that's a really good way to kind of look at it. You've obviously got global megatrends as well, where we're looking at things like average kind of lifespan, population shifts, all of these kind of things, where regulation might be going,
Mhm.
urbanization, sustainability pressure. Obviously, ESG was a big thing 3, 4 years ago, not so much now. But these are all trends that we see in the marketplace that longer term investors are analyzing and making recommendations. So you can normally look at any investment bank and get some kind of feel for where they might be seeing the markets, whether it's currency they're trading or whether it's Fortune 500 stocks. They want to have an understanding of where the market's going so they can assess the viability of that business plan and whether the CEO of that business has got the strategy right in a way that excites investors to be able to build its share price and increase its market cap. And if you can use that as a weather vane, even though you're further down the supply chain, to
Mhm.
say, well, if they're going in that direction, then how do I pivot my business to be able to kind of follow in that particular direction as well? And that's a really good way to start. Um, I also think, management consultancies, you don't need to pay for a PwC or a Deloitte or a McKinsey consultant because they have excellent reports that you can access about your sector or about the particular horizontal area that you're focusing on, be it tech, be it marketing, be it HR, that you can look at what best practices and you can apply some of those best practice ideas in your business that really boosts your intangible capitals, which is the value of your internal structure that can make up to 70% of your valuation, as that's what makes your business more attractive, increasing the multiple on EBITDA that you would be valued at. So there's lots of different things that you can do that exist out there and start to ask yourself, how are we applying this thinking as a business in a way that is defensible to an investor.
Yeah, what I found from for me personally as we've been growing our enterprises is as when I'm wearing my CEO hat, because I still wear some of the other hats,
Hmm.
I'm looking 18 to 30, 36 months into the future. Where are things going? What are these trends? And really being able to leverage experts, just like a professional investor would do,
Hmm.
right? But I need to be forecasting to some extent because if I can see, like we own an accounting firm, right? We do taxes for people. It's very clear that a lot of taxes are being done by AI or software now, right?
Hmm.
Like that's changing super, super fast. 2 years ago, that was a distant dream. Now they can do personal tax returns pretty easily and business returns probably by the end of this year. And
Hmm.
so I would expect that in a year or two, like doing tax returns isn't even going to be a thing, right? I mean,
Hmm.
it's going to there's a cost to it because a human still has to oversee it a little bit, but it's going to be very commoditized, which is very different than 10 years ago or even 5 years ago where you had to have smart people in there crunching the numbers, filling out the forms, doing a lot of that even with software. And so I have to look at that and say, okay, if this is the direction, where do we need to focus, right? Our team has chosen to focus on tax strategy. Like,
Hmm.
how do we do the advising? How do we help people throughout the year make better decisions? Not so much on tax filing, because
Yeah.
tax filing is going to disappear. Right? And so
Hmm.
these are things we need to look at from a viability standpoint, to your point, Rob, of if I was talking to a group of investors and they're saying, hey, you want to go buy accounting firms?
Hmm.
If I was saying, yeah, we're going to buy a bunch of them and we're just going to do people's taxes, they might
Yeah.
say that's a terrible idea because that's not going to exist in the same way in 2 years that it does now. You want to be doing that internally. Is that what you're saying?
Exactly. Yeah, I am. And what you said brings to mind another simulation, which I think is really helpful for business owners, and that's the investor analysts meeting. Whereas the
Okay.
CEO of the business, you have to go in front of the analysts, you have to share your strategy, and then they're going to fire questions at you, and you need to be able to defend them. So if
Right.
you think about somebody that might have bought your stock, again, as the simulation, you might not be in a position to do that. But exactly as you said, you imagine that you're talking about going out there and you've still got this very analog, non-digital process, and you've explained your unit economics about how much money you expect to make for this package service that you're providing to this particular community of business owners and customers.
Right.
And one of the investor analysts say, well, this company's already made this move to AI and they're forecasting 40% reduction in costs. So where does that leave your unit economics right now? You need to be able to defend that and say, and you can't, right? So that would then force you into, right. So if that's the question the investor analyst would have asked me, then I need to be looking at how I can bring AI into my business. So you need to be ahead or tapping into the kinds of questions that an investor analyst would be asking you. And then that keeps you honest, I think, in terms of defending your strategy and your narrative, and also demonstrating that there is a viable market out there for what you do. And when we are talking about this expansive strategy where you have to go out and raise funds, you're building this investment business, you want to own 25 e-commerce businesses in the next 5 years, but you need somebody to be able to give you the money, or you need a bank to be able to provide you with the debt to be able to go and do that. Understandably, you've got to have a watertight narrative that excites them with the ambition, but also demonstrates to them that you can see exactly where those risks are and where those opportunities are. And your whole approach is rigorous and robust, that gives them confidence that you know exactly what you're doing as the CEO or owner of that particular business. And you need that same level of diligence and rigor from your leadership teams as well. Whoever's in charge of technology, I want them to be able to stand in front of my investor analyst and defend the technology strategy. The sales lead, the director of sales, the same thing. I want to be able to think, what questions would I ask them to defend their sales strategy that ladders up to achieving the results that you need as the CEO? So all of this really cascades down from that viable market narrative, that defensible business strategy narrative, and then how the rest of the organization are aligned to be able to deliver that. And this isn't for today, but that's why I've created that 5 keys framework that we've discussed in the past, Derek, because
Yep.
that's exactly how you line up your people to be able to deliver that mission with a high level of probability
Yeah.
and being able to create that outcome that is far greater than the sum of the individual parts. Because as an investor, that's exactly what I want. If I've got capital investment of 3 million, I want to feel that its value is actually 8 million.
Right. Sure, sure. What every investor wants, right? I give you money
Absolutely.
and you make it worth more money. Yeah, and for your five keys framework, we'll link to that down in the description below so that people can go watch that video because I really think that's such a powerful way to approach it. And we
Hmm.
won't spend a bunch of time, but for those of you interested, you can go watch the video there.
Definitely.
But ultimately, what I hear you saying, Rob, is if I want to grow and make my business so that it meets my needs, right? You always talk about we want to begin with the end in mind of like what do I ultimately want to accomplish or achieve? And then we have to reverse engineer it. And I know that if I want to have a $50 million exit or a 25 million or a $100 million exit, okay, what's it going to take for me to get there? How big do we need to be revenue wise or income wise or EBITDA wise or whatever? And then what are the systems? What's the team? What's everything else? And then, okay, now I need to start thinking like an investor. If I was going to invest money into my company to get there, where would I deploy that money? And
Hmm.
to your point, if there was a team of people looking over my shoulder, nobody loves people looking over your shoulder, but it sure makes you double check your work, right? You don't just go out and do things willy nilly. You stay more focused, you stay more disciplined, which is really important if you're going to go that direction. Um, then we start to take and we just have to wear that hat of okay, I've got to think like an investor to grow my business, and this is where to all the conversations you and I have had offline, people are sometimes struggling, right? They're making decisions that they couldn't really defend. They're moving into things that maybe aren't viable and they're hitting a brick wall and they're saying, why isn't this working? And you have to take a step back and say, okay, we thought we could drive down this lane, but that's obviously blocked. Now, is that something we can go over, or is it just that's the end of the trail? We need to understand, is it viable or not to move that direction, or is there a big enough market, or do we have to do something different? So,
Absolutely.
yeah, and I just think this is a really important concept and really important for business owners right now who are looking to take that next step is okay, I think I want to go here. Is that even possible? Is the market big enough? Do we have the capabilities? If we don't, can we add them? And just starting to think about that much more systematically than you might when you're day to day in the trenches with your business, right? And that's really what we're helping people do, either on a group basis with Wealth Your Way or with operating partner one on one. Is how do you tackle these challenges and get to where you ultimately want to go. So,
Absolutely. And Derek, a big part of this is helping people kind of change from thinking and acting on their old or current identity, which has got them to exactly where they are now, which is great. They're the sum total of their experiences, values, behaviors, knowledge, education. That's where you're meant to be. But we help you think like the 150 million asset owner. So you're making decisions now that are on that trajectory, not that trajectory.
yeah,
And a lot of that depends with how satisfied you are with your current growth. We often joke about how you doing. I'm fine. I'm fine. So yeah, I'm fine. I've got a good income. My team think the business is doing very well. My peers think the business is doing very well. But if I move myself out of that Jenga tower, I'm the block that means it collapses. So the
right,
first thing you need to do is take yourself out of the tower and make sure it's intact. That's when you have an asset that you own. The
right.
business is no longer dependent on you. And then I think you can give some real headspace to great, I'm now an asset owner. How do I leverage that ownership to create something far more exciting, far bigger, that involves multiple layers of capital that means the sky's the limit for me?
Right, right. You have to go from the business owning you to you owning the business. And I think a lot of business owners as we talk to them are trapped in that business owns you, right? Like you said, you're the block in the Jenga tower. And that is the first transition, and honestly, I've been going through that, and it can be trickier than you think for sure. And having someone who's walked the path and who can think like the $150 million asset owner is tremendously valuable. And that's why we make these videos, is to help people get a little bit of insight into how do you start to think differently, right? Because to your point, your thinking has gotten you here, but what got you here isn't what will get you there. Everything has a ceiling, and you've got to start shifting your mindset. And that's really the mission we're on, is helping more people to shift that mindset so that you can, because what happens is as you get new beliefs or new understanding, you automatically change behavior, whether you realize it or not. It's not like a forced thing in a lot of cases. As soon as you realize, oh, if I do it differently, I'll get a better result, then you just start doing things differently, right? But until you believe that or can see that, it's very difficult to make a change because you think if I do it differently, it's going to be worse. Like one of the big myths out there is if I make my business bigger, it just means more work for me. You have to change that belief, right? Otherwise, you'll never grow the business. If growing the business means my life is more painful, you'll just shrink the business until it's at the level where you can handle the pain. And that's probably where you're at right now. So you have to think differently. Okay, how do I grow the business and make my life better in order to continue to grow? And that's how an investor would look at it, because they're not looking at that means I have to operate more stuff. It just means I have to deploy the capital and let it do the work. And it's a different paradigm. So now I know we could talk about this stuff for hours, Rob, but if people are interested in finding out a little bit more, I think we'll put a link down below where you can go in and take a free assessment to kind of look at where your business is right now, if you want to evaluate that, and help you to understand maybe where you've got some holes or whatever. And if you want some help, you can let us know. There'll be a way to do that there. Ultimately, we're just trying to help people to see beyond where they can currently see right now, right? It's kind of like looking over a hill. Depending on how high up on the hill you are, that's where your horizon's at, but you can't see past that horizon. We're doing this to give you a chance to go over the top of the horizon and see what's further out there so you can make better decisions now and get those outcomes there. So, Rob, I really appreciate your valuable time sitting here with me and kind of helping people to understand a little bit more about this. And we'll do many more of these, but really, really appreciate it. And for those of you who want to take the assessment, go ahead and do that. You can check out the 5 keys down below, and we'll see you on the next video. Thanks again, Rob.
That's my absolute pleasure, Derek, and I look forward to the next time.